There are two good times to raise investment. It can be tricky to know when the best time is to raise investment, and much of the advice on this centers on the stage of your development. For example, whether or not you're in the concept, startup, or expansion stages of your business. But this isn't always particularly helpful and can vary from founder to founder and sector to sector. But with any campaign, the success is in the positioning of the narrative. When a founder considers selling their product, they think at length in regards to the position it will have in the market. When working with brand and marketing agencies, you'll discuss the narrative that will position the product in the mind of your customers. The same can be applied with the narrative to investors. As a general rule, there are two different angles a founder can take, regardless as to where they are in their development. The first is to position your investment opportunity as before a key milestone. Such a milestone might be before you launch your full product to market, or before you reach 1 million in annual recurring revenue, or before you bring on board a key big name hire. By doing this, you're letting an investor know that now is the best time to invest if they're going to get the best deal. As once you hit these milestones, your valuation will go up and they'll get less equity for their money. This is a great approach for investors with a higher risk to reward appetite. The second approach is to position your investment opportunity after a key milestone. This could be something like having just launched your MVP, or having just reached 1 million users, or just having secured a lucrative commercial partnership. Investing after these milestones feels reassuring. Progress is being made, and therefore this startup has a higher chance of success. This approach is great for dealing with investors that have a lower risk threshold and are more conservative in their strategy. The reality is that when pitching your business, you'll most likely be in a position where you're both before some key milestones and after others. The smart founder will highlight both in their initial pitch in order to establish which resonates with the investors they're speaking to. Then, in the meetings that follow, they'll continue to frame their discussions with the positioning in mind that best resonates with that individual investor.